Hi, my name is Teresa Tims, president of TDR Mortgage in Upland, California, and welcome to the Saturday Show, where we're going to keep you up to date on all the goings-ons in mortgages and real estate in Southern California. Today, help me welcome Christina Hosseini, account executive at Provident Bank in Rancho Cucamonga. Christina is going to share with us the foreclosure, repurchase, waiting periods. Stay tuned. Welcome, Christina, to the Saturday Show.
Hi, Teresa. Thank you for having me.
So, Christina, tell me about Provident Bank and how long you've been there.
Provident Bank has been around since 1956. We serve the
Okay.
local community. Our corporate
Support
offices,
your local business.
Our corporate office is in Riverside, California, and I've been
Okay.
with the company for 12 years now.
Wow, 12 years. That's a long time. I know last time we spoke, you had mentioned that you were an underwriter. So being an account executive and having that underwriting background is a really strong
It
combination.
really helps because I can tell you up front it's going to work or it's not going to work, or help you in packaging it to make it more approvable.
So tell my audience, what exactly is a wholesale rep? And what was my other question? And what is the broker relationship?
An account executive goes to broker offices like yourself, like
Okay.
TDR Mortgage, and we educate the broker so
Okay.
you can educate your clients on what products we offer, and we offer as competitive rates as, probably more competitive than most of our competitors.
Yeah, I think your guys' rates are probably about the lowest, or at the lower end of the spectrum. Okay, so some of you may or may not know this, but I'm what's called a mortgage broker. And being a mortgage broker, I have access to all different types of lenders, and they offer certain niches. Like Provident, one of their niches is that they do investor flips, and they do it very well. They have very low rates, very common sense underwriting. The head underwriter manager, Patty Malloy, has been underwriting FHA loans forever, and so if you really got something that's kind of iffy, I think I have a really good track record in having her help us resolve these issues.
Patty's great. She's been in the business forever, and she's worked with a lot of brokers, and it's repeat business for us.
Loan brokers have access to wholesale rates, and like I said, we can go to all different types of companies to find the right fit for the right customer. Now, the reason you're here, the foreclosure waiting period. So let's talk about those.
Okay.
So let's say I lost my house. Oh, that would be awful. I lost my house, and I know that I'm going to buy another one, and I've heard all these kinds of time frames. What's the real deal? When can I repurchase a home if I were to do VA, FHA, or conventional financing?
If you're going with conventional financing, the waiting period is 7 years. So from the time the home goes to sale, you have to wait 7 years before you can repurchase.
It's a long time.
And if you're going with VA financing, the wait period is 2 years. And if
Okay.
you're going with FHA, it's a 3-year waiting period.
Now, what about short sales? Because I've heard a lot of things about if you have a short sale, realtors are out there talking to people and saying don't foreclose, short sale because it's better on your credit, and then you can repurchase sooner. So what's the truth behind that?
The truth behind that, the short sale waiting period for conventional decreases from 7 years on a foreclosure to 2 years on a short sale conventional.
Okay, so that's a big benefit.
That's a
going
big
from 7
benefit.
years to 2 years.
Correct.
Now,
Now keep in mind that if your loan needs MI, which means if your loan to value is over 80%, the MI companies may have
Mortgage
different
insurance.
restrictions, and they may require a little bit more, but it's all going to depend on the levels of risk in the file.
okay, so you're going to need about 10 to 20% if you repurchase and you've had a short sale and you're using conventional financing.
Right.
Okay.
Now if you're going with VA financing, the wait period is 2 years, and FHA is also 3 years.
Okay, so it's basically the same. So
basically
the only
the same.
difference, short sale, conventional, purchase in 2 years.
Now keep in mind, you may hear on FHA that FHA's requirement after a short sale is 2 years. And that is the case with
Okay.
FHA. However, there are investor overlays, which means the investors go over and above what the agency FHA requires, and they put a stricter requirement that we have to meet.
And the short sale periods and the foreclosure waiting periods, those aren't something where if you go to Wells Fargo, it's going to be less, or you go to a direct lender, it's going to be less. It's really across the board. It's set in stone, and it is what it is what it is. A question that comes to me frequently is, well, I've had some kind of hardship. I talked to another lender, and that lender said, well, if you have a financial hardship, then you don't have to wait the full period. So what's the truth behind that?
I do hear that a lot, and when you really look at the hardship, it's not an acceptable hardship. So when we say extenuating circumstances, we mean major. For example, death of a primary wage earner, medical major medical, a car accident, your primary wage earner couldn't earn a living, the other person had to return to the workforce, cancer, a pregnancy that
went awry,
or you had the children prematurely and that caused you to be out of work longer than you anticipated. Those are what we consider extenuating circumstances. So a hardship is not a job loss. It wouldn't fall into that category.
Or divorce.
Exactly.
Because if that were true, then everybody would be eligible and everybody would be under the financial hardship rule. Okay, now the next thing I want to go into is another common question that is probably even more common than the foreclosure waiting times. I'm just going to read this one to you. Okay. So I have a husband and wife. The husband has the property under his name and the loan is in his name.
Okay.
So husband on the loan, husband on title. Wife is not on the loan or not on title, but if they're husband and wife, they live together, they file taxes together. So if the foreclosure is complete, can the wife purchase right away with FHA, conventional, and all that?
Yes, she can, as long as she has never been on title to that property.
Okay.
So you can't grant deed her off right before the foreclosure and think, okay, this is the way we're going to buy a new house without the waiting period.
Right. And so, we'll find out, we'll know. So you can't.
Right. You can't take her off and then say she was never on there, because there's records, public records, and we do pull those as a quality control measure.
Okay, so then they'd have to wait the full time. Now, what if they want to repurchase and the foreclosure is not complete and the wife has never been on title, she's never been on the loan, and maybe they've been trying to get a loan mod or something and it's not coming, the wife's like, well, I'm just going to go off and I'm going to purchase.
We do see those.
We get that all the time. I'm like, okay, so the wife's going to go purchase and the husband's going to stay there in the foreclosed house. Yeah, lenders aren't, common sense. So if it makes sense, if it sounds like a duck, or what is that?
If it quacks like a duck, it smells like a duck,
walks like a duck, it's probably a duck. I know I use that one a lot, so I hope there's no duck lovers out there.
So again, if you're in the middle of a foreclosure event, neither party can purchase, whether she's been on title or not, because she does have an interest in that property, even if it's not a vested interest on paper.
Okay, makes sense.
She has to wait. And again, the reason for that is the industry is policing itself.
Okay.
We don't like these buy and bail situations where you buy a house and bail out the previous property.
Right. Okay, so the next thing is, what can we do to get prepared credit-wise? So, Christina, tell all the viewers, okay, I've had a foreclosure. What do I need to do so that I can qualify to repurchase?
After a foreclosure, a short sale, any bankruptcy, any major credit event, you want to reestablish credit. Open credit cards, open installment loans. And I'm not saying go out and get yourself in trouble again, but something reasonable, like a Macy's credit card that you're going to pay off at the end of the month.
Okay.
Not something that you're going to purchase and keep adding to your balance, but something that you can actually afford to pay off. And installment loans add a lot to your credit profile.
Okay.
Rental income, for example, if you're paying $1,800 a month in rent and your new principal and interest on the new house is $1,500, that's huge.
Yeah, underwriters love that, so save those cancel checks. What I want you to do is I want you to have 3 to 5 open accounts, high limit, low balance, a good mix, couple of credit cards, an installment loan, a furniture loan, but like Christina said, don't overspend. My last thing is I really want to tell the readers out there, or the viewers, about Provident Bank and how much I like working with your company. First of all, a successful loan broker, it doesn't matter what company you're using, You will not have success unless you have a really quality inside person. That's someone that knows about guidelines. You know, the common stuff, we could figure that out, we could read, but you know, there's all kinds of intricacies that come up, and you need someone that can help guide you along and help figure out whether or not that loan can be done, how high you can go on your debt ratios, etc. Provident has great rates. They do the investor flips. That's where I do all my investor flips. One of my favorite things about Provident is they give the full fee to the appraiser. So since 2008, they've had something called HVCC, Home Valuation Code of Conduct. It's cut the quality of appraisals. It's cut the fee that the appraisers actually get, in some cases, in half. Provident is an upstanding company, and they give the full fee to the appraiser. So guess what? You get a higher quality appraisal. It's inevitable. You pay for what you get. So Christina, for the other brokers out there that want to contact you and possibly start a relationship with Provident, where should they reach you?
I can be reached on my cell phone, 909-758-6282. And I just want to let you know that with Teresa as your mortgage broker, you're in very good hands. She works with borrowers for sometimes up to a year to get them to a position where they can purchase. And she's doing this on her own time. She doesn't get paid to fix, to help people get into a position that they can purchase a home, but she cares, and that's what you're getting when you use her.
Thank you. I think that there's such a big misconception out there about what to do on your credit. Like, if I get someone's credit and it's 590, I know exactly what they need to do. I write out a step-by-step plan. Do this, do this, do this. Come see me in 2 months, and I guarantee you'll be able to buy a house if you do exactly everything that I say. Sometimes it takes a little bit longer for people to do things. So yeah, Rachel Carrillo, one of my favorite clients. I worked with her for 2 years, and it was very rewarding at the end to see this nice young family get into a nice family home. So,
and while you're going through your credit issues, life happens. So like I know Teresa's worked with some people, credit's been improved, we've been able to put them into a home, but then they lose their job, we have to wait for them to get a new job. So she does stick with you, and she will see you through till the end.
Thanks, Christina. Well, we really appreciate you sticking with our show and listening to the whole thing. And remember, it's never been a better time to buy or sell. So pick up the phone and call me, Teresa Tims, 909-920-3500.
Thank you.